We are really committed to the data journey in real estate, so I'm really excited about this blockchain conversation today. And I'm now going to hand over to Anna to do a bit of an introduction as well.
Thanks, Jen, and hello to everyone online, the wonderful real estate practitioners of Australia and New Zealand. We're so thrilled you could join us today. So REIA is the national body for Australia's real estate sector. We were established in 1924. Our 100-year birthday is coming up quickly, and our members, as many of you online know, are state and territory real estate institutes. We're a very big part of Australia's economy. We represent 44,000 small businesses. We employ a combined 130,000 Australians, and we transact a massive 350 billion in sales each year and collect around 50 billion in rent receipts. So very significant part of Australia's economy. As your voice in Canberra, we're led by a board of real estate agents themselves from across Australia. And when you guys here in Australia join your local institute, you have a team in Canberra working for you in Real Estate House on things such as strategic policy and advocacy, political action, research and evidence, best practice and industry excellence, and member services. Our achievements are many and varied, but I think this year, an election year, as we've just elected a new government here in Australia, one of our most important accomplishments was, of course, in the run into this year's election, securing bipartisan commitment and support to negative gearing in the run into 2022, making it a safe tax mechanism for your guys, property investors for the very first time since 2013. Project Blockchain, as we like to call our new research report, and working with REINZ and the very smart team at RMIT, is one of the future focus pieces of work we're doing to get you guys ready for what is happening tomorrow in the tech space. Last, I just want to thank and acknowledge our corporate partner, Optus Business, who's one of the many partners that made it possible to do this webinar today. So thank you, Jen, and I'll hand back to you to talk all things blockchain.
Thank you. Look, I am now going to have a quick chat to you about Blockchain 101. And the irony of me doing this is not lost. We have a panel of experts who know the space inside out. So you will forgive me for reading the Blockchain 101 introduction out to you. Many of you will know that blockchain has been around for some time. In fact, it was first delivered in 2008, so much longer than I expected it to have been around. In simple terms, blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. It's essentially a digital ledger of transactions that is duplicated and distributed across the entire network on the blockchain. The most widely known use of blockchain is as the distributed ledger that enables cryptocurrency transactions. But that's just one use case for blockchain. There is far more here than just digital currency. Blockchain technology offers security, traceability, and transparency. Blockchain is also immutable or unchangeable. So you can't fiddle with the transactions once it's been recorded. It's literally there forever. And so the transactions are logged with a timestamp. So really open and really secure. Other benefits include greater efficiency because it's quick and easy to share information, and security due to the absence of a single point of failure in the system. Many sectors and organisations are looking at how blockchain technology can be deployed to streamline how business is done, and that is what's starting to happen here in real estate. We see blockchain as an evolving technology that can disrupt or transform parts of the process of buying and selling, renting and leasing real estate. Perhaps parts that we take for granted today, like conveyancing or how contracts are executed. But I guess the rub is that blockchain is really early in its commercial life cycle. We don't know right now what blockchain in real estate will look like, but what we can do is start the learning journey together so that we're not surprised when this stuff comes down the pipe at us. So now I'm going to hand over to Anna to get this conversation started.
Thank you, Jen. And as Jen rightly identified, we've got a panel of experts to help you guys unpack all things blockchain and real estate from two leading real estate agents themselves from both Australia and New Zealand. You'll note I'll always say Australia first, guys. a blockchain software platform, and an anti-blockchain chain, sometimes blockchain user. So can't wait to hear what these guys have to say. But I would say, as a prequel to all this discussion, and this is really relevant for practitioners in both Australia and New Zealand, one of the things I learned on this blockchain journey was both the central bank in New Zealand and the Reserve Bank here in Australia, which we all watch monthly to see what's happening with rate rises. Ours is next Tuesday. Both of those institutions are actually trialing their own digital currency, basically like a cryptocurrency for a central bank or reserve bank. So it's not just something out there in tech space in the Silicon Valley this is happening. These are things our actual regulators and our monetary decision makers are examining closely, looking at the future of how our whole economy will function. So without further ado, I'm going to introduce the speakers sequentially and then ask them to do a 5-minute presentation. So first cab of rank, I'm delighted to introduce Tom Rawson. Tom is the director of Ray White Manu Reiwa. Tom is one of Ray White's leading agents internationally and has been involved in more than $500 million of sales as a salesperson before stepping away from selling. This is fascinating. He's been capitulated into blockchain with a property currently on the market, looking to make history with a Bitcoin auction, navigating New Zealand regulation, legal requirements, and of course, the marvelous New Zealand weather. Tom, over to you.
Tēnā koutou katoa, and hi to all the Australians that won't understand that. Tom Rawson, yes, I'm from South Auckland, here in the beautiful Auckland in New Zealand. My experience in the blockchain is actually a real world one now, which is we've had a client approach one of our salespeople to sell his property, and he wanted to accept Bitcoin as a form of payment for it. So that's all well and nice and a great marketing ploy, but the actual logistics behind that were quite daunting for a first-time seller. It's the first time he's ever sold a house. He inherited this property. And then just working with the likes of the banks, the financiers who have got a mortgage on the property to actually facilitate a sale. Like I've seen a lot of stories where the owner will accept the Bitcoin, but actually the transaction of that. So your typical sale, obviously a deposit's paid, and then that goes into the lawyer's trust account. Once settlement occurs, there's mortgage deeds that get signed and there's a release of mortgage, etc. When you start putting in cryptocurrency into that, all of a sudden you need a lawyer who understands the blockchain and crypto, and how to have a trust account or a multi-signature wallet, as it may be, for accepting the deposit. Obviously, Bitcoin in New Zealand is a bit of a small market compared to probably what it is globally. And so if we only accepted Bitcoin buyers for the property, we'd be limiting the market here in New Zealand for it. So we've basically had to allow for 3 types of buyers for the property, which is live and online at the moment. The campaign's been slightly delayed due to our fantastic weather and a bit of a weather event at the property. But so we've had to allow for 3 types of buyers. So we had to allow for someone who's using normal fiat money or cash and coming to the property via Westpac Bank or any of these other banks, getting a mortgage, etc. Then we've had to facilitate the full Bitcoin buyer. So someone that has a bundle of Bitcoin and they want to transact with this property. And then a buyer that might have some Bitcoin that wants to use that and some cash. And I know James has actually done some transactions with Bitcoin, so he'll be more able to tell you maybe the further logistics of it. But we had to basically be prepared for 3 types of buyers to turn up at the auction. So we needed individual auction agreements, basically depending on which type of buyer it was, a bit more of a pre-screening of the buyer. And we've had interest from people that on all 3 buyer categories: cash buyers, Bitcoin buyers, and one mixture of both. The next thing to obviously organize was a lawyer that understood Bitcoin and how that's going to work, and how they would need to basically talk to the potential buyers' lawyers and facilitate that transaction, like say, hey, at the fall of the hammer, we're going to need a deposit from you. And if you're going to pay in Bitcoin, then here's our wallet address. You're going to need to transfer it across. And then how is that normally released? It's a bit different to a normal trust account. The other thing to consider was our vendor has a mortgage. So if someone was to come in with full Bitcoin, we couldn't give that to the Westpac Bank. So we needed to basically have a solution for that. Someone pays in Bitcoin, there's a transfer that takes place through an exchange, and then off it goes to Westpac. The other thing to consider, so we're running 2 auctions basically at the same time, or 2 different currencies as such. At the fall of the hammer, the property sells $750,000 New Zealand dollars. How many Bitcoin is that? And so what we needed to do was peg an exchange or a conversion rate there as well. So fall of the hammer, everyone agrees this is going to be the exchange rate based on a live ticker of what was happening with Bitcoin. Obviously, Bitcoin fluctuates quite a lot. So from the start of it, so from the start of the auction to the end of it, that price is probably going to vary a little bit as well. So there's a lot to consider in actually facilitating a sale of Bitcoin, and especially through the auction process. And so we've basically had to pave out the way for that. James, I wish I'd known you earlier. Maybe you could have helped save a bit of time with that. But we've now got basically a method where we can accept Bitcoin. The property owner himself, he believes in Bitcoin and wants to basically hand down Bitcoin to his kids rather than one property. So there was a belief in the blockchain and the assets that are involved in it. And so, yeah, a real world scenario currently live, and, having all the balls ready, but not knowing which one we need to catch. And yeah, that's kind of my experience with it to date. There's been a whole lot of toing and froing in behind the scenes to make it seem seamless. And having Bitcoin as it's a buzzword, has been for the last few years, has actually brought people out of the woodwork from a marketing perspective. And I've only been involved in this transaction because of my background with Bitcoin, buying, selling, leverage trading it. And so it is the first house I will have sold in a couple of years. I've been in a management role for the last couple before. I was a salesperson before that. So dusting off the old tool belt to specifically talk about Bitcoin with any Bitcoin interested buyers. And interestingly, yeah, there has been some that have come out of the woodwork with Bitcoin.
Awesome. Thanks, Tom. I can't wait to unpack some of that. So it's actually a really nice segue onto our next panelist. James Snodgrass is the director of Forsyth Real Estate in Sydney. He is one of the most successful real estate agents in Sydney and a proud member of the Real Estate Institute of New South Wales. Prior to his career in real estate, he spent time in the Army Special Forces Commando Battalion, and he became, after that, the youngest ever associate director of one of the world's largest commercial real estate firms. Forsyth Real Estate was the first company in the world to offer homes for sale with Bitcoin. James, after Tom's magnificent presentation of what's happening right now in New Zealand, can't wait to hear from you about your long journey with Bitcoin. Thank you.
I'll just jump in there for James. He's actually just logged off. So I think we're going to pass it over to Chris. If you're there, Rena.
No problem at all. Chris, I will introduce you. Apologies for that to everyone listening in online. Chris is the chairperson of the Trust Alliance, a primary sector national blockchain consortium for New Zealand producers, growers, exporters, retailers, and consumers to easily share trusted data. To quote Chris, Trust Alliance is the anti-blockchain organisation that does blockchain, focusing on identity, location, and critical events that need to be recorded and not necessarily on blockchain. Chris, over to you.
Thank you. Just one moment. Am I off mute? Sorry, you caught me unawares here. Okay, so I'll just launch my presentation here. Just one moment while I hit the right button. Not now, please. So from the beginning. Okay, there we go. Okay, so my name's Chris Claridge. I'm the chair of the Trust Alliance, which makes up about 30 members, which is looking at the agricultural sector in New Zealand. What we've identified is a number of problems that we want to solve. So who is the Trust Alliance? We're a non-profit industry consortium. We digitally touch each farm about 4 or 5 times through our membership. We're looking to build out the digital infrastructure which will be owned and governed by the community, and this is to enable data to be captured once, share when required in a permissioned way, and protect that data always. What we've discovered is that you have multiple identities, and I have to explain this before we get on to how you actually work with the blockchain, because blockchain's only a very limited part of the story, and Tom began to allude to this, that the Bitcoin is simply a value which you transact with, but you need a digital infrastructure around it that can actually work with that tool. So blockchain in of itself on its own is of very little value. What you need to be thinking about is the wider architecture of how you take this type of technology and utilize it, because on its own, blockchain will not be of any value to this industry. You have to consider a wider architecture. RMIT have done a very good job, I know them well, but what they've concentrated on is the financial aspects. They've started to talk about the wider architecture towards the end of their paper, and that's what the industry should consider. So what we've looked at is identities, how they actually function, and how they'll actually work. In order to do that, we've got a number of identity types that you can see on the screen there, but identities are not limited to personal identification. You can create an identity for anything: a cow, a crop, a tractor, a house, and also a system, i.e. a mortgage or a limb or a document or a process. So we're moving from this idea of centralized data sets away to a more decentralized approach where people hold their own data. They will hold their own limb, they'll hold their own mortgage details. And so we see the potential for new types of transactions to occur. And we see the emergence of what's called a triangle of trust between an issuer of credentials to someone that holds those credentials, i.e. a mortgage in a wallet, and then someone who might verify that. And you start to see how this could be built out over time, is that you get a new way of transacting, of which the blockchain is only a minor part of it. There's a wider thing going on here that's happening in the rest of the world, but in New Zealand, we're way behind. Australia's a little bit more advanced, but in North America and in Europe in particular, we're seeing new digital economies starting to emerge. And this is the sort of language that we're starting to see evolve, this idea of a digital wallet. Tom referred to it, where the token might sit or the value might sit, but how does that token get in there? How do I use it? How do I integrate it with other systems? So you see the start of an establishment of an infrastructure, and you see layers starting to be built out in much the same way that the internet was built out in the 80s and 90s. That's what's starting to emerge. And we see, this is a big slide, you'll go, what the hell is happening here? But this gives you an idea of self-sovereign identity infrastructure, of how you get the phones working, the tablets working, computers working with this new way of operating digitally using blockchain as one of the parts. It's only one of the parts. So here you can see what we're trying to build out is an infrastructure building on existing data, where you can see we're looking at blockchain integrations. How do the digital applications work? How do the nodes work? How does the framework, how's the consortium work? In other words, behind the scenes, how do you actually make this work? That's what the Trust Alliance is doing. We're looking at the overall architecture, not just focusing on, say, Bitcoin or the blockchain. If you focus on that bit, you'll simply miss the opportunity of what you have in front of you. Okay, that's me finished.
Thanks, Chris. Amazing presentation. And we are already getting some questions lining up, which is wonderful. Poor James, the metropolis of Sydney, had a internet blackout. He will be back online with us shortly, but we'll now jump to Jeremy first, and then we'll circle back to James, who I gave a wonderful introduction for, which he sadly didn't hear. But Jeremy, a good friend of the Real Estate Institute, a successful entrepreneur, He's learnt a lot the hard way, including with a guinea pig farm that he founded at the age of 7. And he now runs one of the largest real estate blockchain companies in Australia, Hutley. I can speak from experience. Jeremy is an energetic leader with a love for blockchain, conceptualizing strategy and commercialization. Over to you, Jeremy.
Yeah, thanks very much, Anna and Jen, for having us. So first acknowledge the Turrbal people, which are the people of Tenerife or Brisbane, where I'm based at the moment. And I'll probably reiterate everything that Chris was saying. You won't find me talking only about blockchain. I think blockchain is certainly an important part of what we're doing, but it is only one part. So hence the presentation is blockchain where it makes sense. So a bit of background, you have Web 1.0 and a lot of agencies are still actively in this space where you have a server on site. Your data is isolated, lives in silo or it's not captured at all. And that actually offers a single point of failure. I remember early on in Hutley's days when we were talking to real estate agencies, they used to take a copy of the database home. They'd have turns taking the hard drive home. So if the building ever burnt down, they wouldn't lose all their data. And that's kind of where real estate started off. But where it gets interesting is sort of this Web 2.0 world. And here we've centralized everything. You know, the internet was great. It enabled information to be transferred globally in an instant. And with that, it actually resulted in everything being centralized. And now what we do is we rely on others to store our data for us. So, and as a result of that, every day, we actually trade off our own value for utility. So in real estate, for example, and I'll give you some very terrifying numbers, but agencies and agents provide their data to a very large number of centralized powers, such as the realestate.com.au, Domain, and CoreLogic. And these entities take your data and turn that into insights and then sell products and services either back to you and to others. To give you an idea of some figures, last financial year, CoreLogic revenues were $1.57 billion, REA was $928 million, and Domain was $289 million, but joined together about $2.7 billion. For an average revenue per agency in Australia, there's 10,400 agencies in Australia, that's $268,000. So your data as an agency in aggregate is worth about $268K per year and growing between 13 and 16% per annum. So really interestingly, in addition to this, the power is 100% in the control of a very small number of large companies, all representing single points of failure. So if you think about all the personal information that you have about your business, your bank accounts, your clients, your suppliers that exist in trust accounting platforms, banks, and data companies, every agency is actually quite exposed to these single points of failures, being the large partners and institutions that they use. So Australia's moving one step closer. We've got CDR or open banking, which is very much now coming to the fore. And that's the start of the move towards self-control of data, but very, very different to what we see in the Web3 world. So in the Web3 world or blockchain, we have shared infrastructure for shared economy. And very much agree with the previous speakers. You own your data, you permission who can use it, who can see it, and where it can be applied. So it's your data, your superpower, and the data is protected in wallets, which you have a unique key to access and then decide about where it gets shared to and how. Back to real estate as an example. So in a real estate contract and the workflows associated with that, there's about 73 really valuable data points. So a user of Hutley would have self-custody of that data, as would the tenant, for example, their own digital identity, landlord, buyer, and seller. And once you have custody, you can decide what to do with it. So you can give it away for free if you want. You can donate it to science, or do what the big three are doing and make 268K per annum for your own agency. So at Hutley, we see a world where real estate agencies, agents, property managers, led by the real estate institutes, come together as a group and have self-custody of their data, generating significant value back to the very person or entity that generated that raw data point originally. So really the great democratization of data. So we're super excited. We see in the blockchain world, it's a mix of the Web 2, Web 3 world. You use blockchain where it makes a whole lot of sense. You don't need to use it for everything. and it certainly won't replace the agent or the property manager. I think it's a very emotional transaction, property, and you can't replace that human. I always say you can't smell a photo, and that's the best example I have when it comes to the importance of an agent or property manager in real estate. So keep focused on the human connection, and Hutley is there to try and solve for the, or work with the REIs to solve for the data challenge, and also for the other efficiencies that you find with blockchain, such as real-time accounting, which was referenced in the report. So that's all from me. Thanks for your time, and looking forward to the panel discussion.
Thanks, Jeremy. Keen to understand a bit more about those 73 data points. If you can just close your screen share, that would be awesome. Now, Mr. Snodgrass, I'm looking forward to finally hearing from you and your journey as a real estate agent, being the first in the world to list a Bitcoin property for sale. Over to you.
Good morning, everybody. Sorry about that. We've just installed Elon Musk's Skylink internet at the office. That was last week, and would you believe it just dropped out about 5 minutes ago? So that's some timing for you. It's up and running, and I hope it proves to be a very reliable service from here. To all my Kiwi friends, years ago, when we all did our travelling in our early 20s, I lived in a house with 9 Kiwis and 1 Aussie, being myself, and they looked after me, and I've got some great memories of them, and of course your beautiful country. To all my Aussie counterparts, good morning. About 10 years ago, I was travelling around the world, Jakarta, Istanbul, Europe, America. Everywhere I went, every airport, every cafe, someone was talking about Bitcoin. Someone was talking about blockchain, and no one understood it. So I came back and did my homework, and started to get quite fascinated about this. And of course, at the time, people started printing money, and there was all sorts of things going on behind it. And so I found out as much as I could, and I was quite fascinated about the whole thing. We decided to see if we could sell a property through Bitcoin. And a couple of the main reasons was because there was billions of dollars being poured into this, and the money could be transferred from anywhere around the world. And we thought, well, we'll just give it a go and see what happens. So we released we made a press release, and within 24 hours it went viral. And we were on the front page of the New York Times, we were on the front page of the Sydney Morning Herald. We were being interviewed literally all day, all night for 3 days from around the world. It went absolutely crazy. The only problem with that, we hadn't sold anything through Bitcoin or blockchain at that stage. So within a week, people were saying, well, we've got a property we want to sell. We want the proceeds in Bitcoin. We want to, and that was all around the world. People were ringing me from Indonesia. People were ringing me from Australia, especially Queensland. They were very interested in it, and obviously the market was a little bit slower, so they were looking at any ways to promote their property. So it went crazy, and then all of a sudden I started being interviewed for people's theses and all sorts of things. It was quite some time before we actually did a transaction. And in the meantime, the Department of Fair Trading, the tax department, everyone started ringing up and said, what's going on? Are you going to pay your stamp duty and all that? So we showed them our press release. We also showed them our business plan on how this was going to operate. And so the main fact was that we were going to transfer the money through to a company called CoinJar, and they were going to transfer the money in Australian dollars to us. So it was actually quite a simple process. And it as I said, gained a lot of interest from all around the world. It also attracted a lot of negative interest, because there was a lot of suspicion, and there still is, around blockchain, especially around things like Bitcoin. So it was interesting that we found that people were either very pro and thought we were way ahead of the competition, and others thought, well, what's going on here? This stuff's got a bad name. What are you guys getting involved with? With the tax department also did an audit, and I'm pleased to say they then sent us a letter to say how professional we were and how amazing they thought that our entrepreneurial spirit was. So it was a lovely letter from the head of the tax department. Do I think there's a great future with this sort of stuff? Absolutely. Do we need money anymore? No. Do we need other forms of money that connects with the digital world? I absolutely believe so. Can real estate be a part of that? Yes, because I think we'll all agree that it's a great industry, but it actually doesn't change quickly, and often it changes behind the rest of the world. Now, that's a great thing because they'll always need real estate agents. The speaker before me talked about that, looking after the personal side of it, which we're really big on here. But there's also the digital side, which I think real estate has got a long way to go. It's catching up quickly, but it's certainly got a long way to go. And we at Forsyths, we love being ahead of the game and being right at the forefront of change. What other notes have I got here? So when we did our transaction, we actually sold a $10 million property, which was a fantastic coup. And that was a private inspection, so it wasn't an auction. And the gentleman turned up and he said, we'd like to make an offer. And we said, well, yes, that's fine. He made his offer, which was a very good offer. And he said, that's my final offer. And I'm going to use Bitcoin. And he was very aware of what needed to be done. And the Bitcoin was transferred through to CoinJar, and we had it in our account the next day. So it was very efficient, wonderful. We also saw that transferring money from all over the world. So we had a lot of Hong Kong buyers, a lot of like us all in real estate in Australia and New Zealand, that they could transfer money to CoinJar, buy Bitcoin, transfer it to CoinJar, and get the money through that way. And it was again really efficient, quick, and we found a very reliable service. And that's what I've got to tell you.
Thanks, James. What an incredible journey. I'm dying to ask yourself and Tom so many things, including, do you take your commission in Bitcoin or do you take it in Australia and New Zealand dollars? But we've got quite a few questions pinging in. I think this is probably a question jointly to both Tom and James. Is the planning part key to succeeding in, facilitating the successful property transaction using both blockchain and cryptocurrency? What would you have both done differently had you had your time again? I might start with you, James, and then I'll shift to Tom.
Back then, there was very little understanding, but a lot of interest. And so we were doing our best to educate people. I think we could have done a better job, but there was only so much that we really knew about it back then. So I think the difference between now and then is a lot more people are aware of Bitcoin. And they said it the other day, 1 million Australians invest in cryptocurrency. That's a lot of people.
And Tom, what would you do if you had your time again, having just gone through this process of marketing a new property?
This particular property, I would have advised them to probably just sell for normal fiat, normal money, because we entered into this like 8 months ago. There was a bit of a process. There was a little bit of COVID happening and a few other bits and pieces over here. And the prices of the property have receded quite a lot in the particular suburb where this property is for sale. So in a nutshell, he would have got more New Zealand dollars for it if he'd sold a while ago. On the flip side, Bitcoin's going to come back down as well at the same time. So as a net result, he might end up with more coins than he would have if he had sold 8 months ago, because Bitcoin prices were higher. I think we've spent a bit of time and money reinventing the wheel somewhat, and that's kind of what it feels like reinventing the wheel a little bit to make it an acceptable form of currency for a transaction. But now that it's, we've figured out a way and doing it at a live auction, probably being the hardest part of it too, because I mean, if it's negotiation, you can put in a clause to kind of protect yourself there a little bit and give everyone a bit of time. But running an auction campaign, maybe not for the faint-hearted in terms of that, because you could have any one of 3 buyers turn up to the property to bid, and you've got to be prepared for all scenarios.
Yeah, great. Thanks, Tom. So that planning piece is key. And I mean, I've obviously watched the news stories. Bitcoin's one price one day and then a very low price the next day. And that's obviously a huge risk for the client and something they need to take really seriously. Now I've got a really interesting question in the chat box. Has there been much interest from buyers and other groups in fractional ownership models yet? Jeremy, I might ask that you take that one.
Yeah, there has been. So there's been a number of companies that have sort of pushed into this space. There's Bricklets, there's and we've been looking at options around this as well. So certainly I think I think anything to do with the blockchain, I think there's 2 elements. One, don't think of it as any different to Web 2.0 infrastructure. It's just a technology that gets used underneath that enables you to do different things. And in fractionalization of property, there's opportunities to solve the first homeowner's problem, for example. So you could separate the rights to the underlying land with the physical infrastructure, for example, and reduce the cost of a property by 15, 20, 30%. So there's all sorts of different solutions that you can look at in the fractionalization space. But again, it's there's a way to go around people building trust. At the moment, crypto is heavily linked to blockchain. And I would say, unfortunately, in many respects, that people think blockchain, they think crypto. But I think the internet was the same and email was the same. Everything's been the same in its early years, is that it gets used for or seen as one application, and then time sort of changes how people think and behave. So blockchain's in the same early infancy. I would encourage everyone not to think of crypto when you think of blockchain. That is one of many applications, and certainly fractional ownership of land is something that there's a lot of businesses working on at the moment.
Yeah, thanks, Jeremy. And I think that is a really important distinction. There's the crypto stuff, which is the front page of the New York Times, versus the many and varied use cases of blockchain itself, like, a permanent storage place for your bank guarantees, as has already been used in Australia. Chris, as the kind of blockchain enthusiast, I might throw to you now. I mean, a lot of this is about trust economy and trust. So tell us about your kind of blockchain use.
Well, the reasons for why I'm anti-blockchain is Jeremy's just alluded to it. The fact that we're talking about cryptocurrency is a complete waste of time. That's not the question. The question is, how do you make the transactions frictionless? How do you increase efficiency? How do you ensure that people own and control their data? Blockchain is merely a register that's not even needed for some of these types of technologies. And Jeremy's, you've got someone in the industry who obviously knows what they're doing and what they're talking about. When he says don't talk about crypto, I mean don't talk about crypto, because that's a red herring and your energy will get diffused. The challenge for the real estate industry, Anna and Jen, is how do you take these new technologies and apply it across the industry to solve the problems that Jeremy's alluded to. And that's where the Trust Alliance is working in. How do we operate at a industry level? Jeremy's what we call a network operator. Jeremy will understand this language. We're the DID registry, we're the issuer of the DIDs that allow the transactions to occur and trust to be built into the network. You've got in Jeremy a network operator. We don't have anyone like him in New Zealand, so that's brilliant for a start. But then we have the opposite. We have the governance and the structure. We don't have a network operator that can have a coherent discussion with. And then you've got to architect a new way of working, which changes systems, changes businesses, and is a real challenge, Anna and Jen, for how you operate as an industry. It's very disruptive, and it changes the way you govern, changes the way you operate, and it really will turn everything on its head. And the question you've got to answer is, are you ready for it? And I'd say at this point, Possibly not, because this is going to accelerate in ways that you probably can't imagine. And we're starting to see glimmers of it with fractional ownership in these types of models.
Thanks, Chris. And I think, are we ready for it? That's one of the questions we're just beginning to unpack with this bit of research and indeed the webinar today. I've got another great question for both Tom and James. What happens if the Bitcoin value at the fall of the hammer is significantly different to the Bitcoin value at settlement? Tom, you did touch on this. Over to you.
Yeah, so that was one of the things we needed to consider. Quite often, like in tenanted property, which is the property that we were selling, it's a 90-day notice period if you wanted vacant possession, so 94 days to allow for postage and handling. So having a 3-month window between the fall of the hammer and actual settlement deposit of the remaining balance was a risk to both parties. Yeah, it could fluctuate heavily. Sorry, we're talking about crypto again rather than blockchain. But yeah, that was one of the big risks there. So we wanted to reduce the risk and basically say there had to be a quick settlement just to limit exposure to fluctuations in the exchange rate.
Thanks, James. Any sort of experiences you can draw on?
Yeah, we always stayed in Aussie dollars, so we were always trading in the dollars. The fact that people could use crypto, we actually, as I said before, we were using a company, and then they'd send their crypto to that company, and then the company would send us Aussie dollars. So that simplified the process for us.
Yeah, great. Thanks, James. Now we've got 2 questions on regulation. So I might start with one which is kind of quite specifically for New Zealand, because it's about anti-money laundering, which we don't have to the same level that the Kiwis do, due to actually the good work of REIA. Apologies, I couldn't help myself with that one. So for you, Tom, how are our anti-money laundering requirements affecting trading real estate in Bitcoin?
Exactly the same as any other currency. Like if we treat Bitcoin as just another currency, I mean, call it Japanese yen, it's exactly the same. Like you're coming to the party with some form of asset. Anti-money laundering is just looking at where you generated the income to get those assets or where they're parked. So as the selling agent, we are acting for the vendor. So we provide AML on the vendor, anti-money laundering on the vendor via a third party, and they'll just be looking at where they accumulated the property from, because that's what's for sale. For the buyer, they'd be needing to use a lawyer who've signed off on their AML as well to make sure that they're okay to be a customer within their law firm. So that lawyer would do the same process, but on the buyer, like, hey, where did you get these Bitcoin from? Is there income to support that you've generated it via your income, or you sold your car and bought a Bitcoin or whatever. So it's just the same as if you'd accumulated yen or US dollar in an account. Yeah, so if you just treat it like another currency.
Yeah, okay. So stick to the rules is the long and short of that answer for you guys.
It's not a way to get around AML for sure. I mean, you're not going to end up with some illegal dude who's accumulated all these Bitcoin from ripping off an exchange, buying property. I mean, you're still going to need a lawyer in New Zealand to want to transact for that person, and that's where the safety is.
Yep. Excellent. Thanks, Tom. So this is another question on regulation, which probably I'd welcome the view from all the panelists from. I'm interested to see where the biggest regulatory challenges are at the moment. Is there an equal appetite to facilitate the growth and innovation versus regulate and restrict the innovations? So I might go James and Jeremy from the Aussie side, and then we'll go Chris and Tom from the Kiwi side. So James, over to you. Given you got your glowing letter from the tax office, which almost never happens.
I know, I was more surprised than anybody. It was wonderful. Look, as you know, in Australia, we don't really track where the money comes from as a real estate agent. We identify the buyers and we identify the vendors, but there's a large area open for where the money comes from, and we've seen certainly plenty of that over the last couple of years. You wouldn't know where the money comes from. good or bad, or whatever your thought is on that. But I do believe that real estate, there's a lot of need and a lot of room for us to be more entrepreneurial and more forward thinking. I think as an industry, we are quite slow in doing that and quite conservative. New stuff is often takes a long time to implement. And I think things like this are really important, whether you like Bitcoin, you hate Bitcoin, whether you like all these things. A lot of it I found was ignorance, which is a shame, because that holds innovation back. You can have your opinion, but make sure you've got your facts before you make your decision. Is probably my feedback.
Yeah,
Thanks, James. Jeremy?
You can probably add to that. So I think when you look at one of the biggest challenges facing agencies in both New Zealand and Australia is your compliance around how money is moved and transacted, and the risk of fraud and theft associated with that. So one of the solutions that Huttly has is that will be coming to market in the not too distant future is the ability to use smart contracts to transact the money in your agency. And by doing so, we'll have one of the big four audit us at a smart contract level, which will automatically make your agency trust compliant. So you eliminate the risk of theft and fraud. You're automatically compliant. No longer need trust audits and etc. By simply using a smart contract solution that then moves the fiat or the hard currency through wallets that can't be transacted by any individual person. So it's that sort of technology that meets the regulator halfway. Like you could go down the trustless environment and just transact and bypass trust accounting altogether. But for Huttly, we've said to ourselves, you're best to find that nice common ground to operate rather than trying to disrupt or totally change an entire landscape. And so for us, it's taking that common sense approach in the technologies that we innovate on and deploy into the market. So. But I think it's always going to be a challenge. The regulator look at buy now, pay later right now. There's ample opportunity for the regulator to regulate that, 2, 3, 4 years ago. But that's not how government works. And they let the market do what the market needed to do. And now we, have a situation where that's being looked at. So I think there's an element of how much do you want the regulator to be involved versus the market doing its thing. And as long as both sides are relatively responsible and considerate going into it, I think you'll end up with a good result. But certainly you'll always find those edge cases of people pushing a little bit further than they probably should.
Awesome. Thanks, Jeremy. Chris, thoughts on regulation? How much should the sector be regulated? Over to you.
So we have in the second reading in New Zealand is the Digital Identity Services Trust Framework Bill. What this does is create digital identities not only for individuals, but for organisations, and allows for organisations such as the Real Estate Institute to issue digital identities for each one of your real estate companies, which then would allow you to build a digital infrastructure that could lead you down the pathway of digital wallets, digital transactions, and to get a decentralized model in place. So therefore, in New Zealand, we actually have the legal framework to drive down what Jeremy has been alluded to and what Huttly has started you down that track. I don't know where Australia is up to. It's interesting. They've got in New South Wales have adopted self-sovereign identity, which is really same as Singaporean government has done it, and the Europeans have adopted digital identity in totality. Now, remember, digital identity is not just for an individual, but also for an organization, also for an object. So theoretically, you could construct a wallet to be a house. And from that, a whole number of things starts to evolve. If you have a DID or decentralized identity framework that you as an industry agree on, in other words, you have an ontology or a framework in which you can get ecosystem developing with something like, with the types of Huttly. So yes, New Zealand is getting into this. Yes, it is happening at a state level in Australia, but we know in Europe, they've adopted this wholesale and have had that there for 15 years. So now you're seeing digital wallets emerging for construction. So you're going to have to prove a building as carbon neutral. You've got to store the data alluded, attached. So this is happening, and it's happening really quickly and really fast. A lot faster than people actually on the ground. And I'm sorry, I'm going to repeat this. When you get into conversations about Bitcoin, you know that the conversation's lost. You're talking, I'm sorry, because you as an industry, you need to talk about what is the frameworks that you have to build in terms of governance and structure to run this. If you're talking about settlements in Bitcoin, you're part of the conversation. The conversation's a hell of a lot bigger. And that's really critical you get on top of it. Otherwise, you'll have an international player move into this market and disrupt it super, super quickly. So, and Jeremy will tell you, you'll get someone moving in here who will digitize the real estate industry, who will, under Web 3.0, will disrupt you entirely. And I'll make that prediction. In 10 years, what you've got now will be completely and utterly different.
Thanks, Chris. Tom, over to you. Some thoughts on regulation.
We'll keep it quick because I know you're going to close there, Anna. Yeah, there's been two threads, I reckon, in this chat today. So it's like the crypto, which is obviously one of the things, and then the blockchain being a framework. So I really liked what the guys have said there in terms of moving closer to the middle ground. Most of the properties in New Zealand, and I don't know what it's like in Australia, be fairly similar, are with the old framework of banks and mortgages and transacted through trust accounts, etc., etc. So blockchain is moving away from a fairly standard framework and moving towards something completely kind of digital, and there's a lot of security around it. I'm all for that, a middle ground where banks are still going to be a massive part of our lives forever, unfortunately, and we're going to rely on mortgages and all the rest of it. So we don't want to move away and reinvent the wheel. Like I'd hate to be getting my finance from Bybit or crypto.com or something. I'm happy with Westpac. And so I think that working with these big players is going to be critical with any blockchain movement, any transactions that if it's going through that framework. And then Bitcoin, just another currency. That's how we've got to treat that. You can pay for a house with a couple of cars if you wanted to, as long as both parties are willing to accept that as a form of payment.
Awesome. Thanks, Tom. We've got so many other great questions, but unfortunately, we're going to have to call time. I'm getting messages. So I really want to thank our amazing panelists today, James, Tom, Jeremy, and Chris. I'm sure if you've got follow-up questions, they'd be more than happy to answer them. And certainly the teams at the institutes would be thrilled to get those questions to you. I think Tom actually did a magnificent job at summarizing where we're at. There's a few components here. There's cryptocurrency, which is obviously the exciting and newsworthy thing, and obviously something that real estate agents can use successfully and diligently and work through the issues, as both James and Tom have demonstrated. People at the center of real estate doing their jobs for their clients is going to be a critical part of any adoption of Web 3.0 technologies. Stick to the rules, always follow the law. Blockchain doesn't impact that in any way, and neither does cryptocurrency. And in fact, you can get rave reviews from the tax office while doing so. So that's good feedback to get. And always use the right tools. If you're looking at crypto, learn from Tom and James's experiences using proper platforms like CoinJar. So that's it. I really want to encourage you all. There's going to be a survey at the close of this webinar. Please fill it in and please get in touch with both of the institutes. We'll send out a recording, a copy of our report, and a few of you have requested Tom's Bitcoin listing, which I will check with him. We can give permission to share. So thank you so much, everybody. And we might call this webinar to a close. Have a wonderful day.
Thank you.